We're just going to have a little panel discussion, the four of us. I'm feeling lazy, so I'm sitting. But I threw a title at it because Matt asked me for one earlier in the week. And partially it came out of what's working, if anything is, in this market. And to my mind, there's a couple of things that are quote-unquote working. They're not working the same way, but one is sort of discovery holes, drill plays. If you're lucky enough to be in front of a set of really good holes, they're having a number of companies that have gotten very strong positive market reactions to good drill holes in the last month or two. I consider it sort of the opposite end of the spectrum is that you look for very cheap resources. It's not the same kind of play in the sense that if you're buying at that end, you don't really have any expectations unless you're a rabid gold bug that you're going to make any huge amount of money right away. The idea is it's sort of patient. I guess you could say patient money and impatient money, but there's nothing stopping you being both, because personally I trade both of them. There are companies where I go, that's just way too cheap for the resources they own. I'll buy some more of it, but at the same time it's more fun. It's more fun trading drill plays because there's something going on. And I've always had a soft spot for discovery plays, so I kind of do both. I'm just going to ask all three of you guys, I mean, do you consider yourself in one camp or the other? I mean, do you have a preference in terms of which way you would go?
Yeah, as far as I'm concerned, I love the treasure hunt. I'm an exploration guy at heart. I love to go out and I do the site visits. I travel around to go out and check things out. And I think from my standpoint, I was writing to my subscribers this summer saying I was hoping that discovery, good big high-grade discoveries in good jurisdictions would lead the way and our market could recover, because in the past that has happened. We've been in a bad market, a big discovery happens, the market takes off. Well, it didn't happen this fall, but at least we're getting good numbers, good exciting stories. I haven't felt this excited about exploration in a very long time. And so that's the good news. On the bigger picture stuff, the general market, the assets that Eric's talking about that are undervalued, severely undervalued, it could get worse with tax loss selling if they don't have news. See, I think the companies that can make news between now and the end of the year will be okay. Companies not could get hurt. And so there's great buying opportunities here. But if you read in the circular my 3 strategies to profit in junior mining shares over the next several months, I think there's some good opportunities there.
Okay, what about you, Jay? Do you have a strong preference one way or the other?
No, I think, obviously last year I was fortunate enough to own Novo Resources, and this year fortunate enough to own Great Bear. So it's nice to have a couple of those sweeteners in the middle of a time when everything seems to be gloomy and not very exciting in terms of, you have to, what's interesting is that even in this sort of horrible market that a Great Bear can take off as it has so I think it's, in this kind of a market, obviously, those are the attractive things, those kind of projects, those kind of plays. But the problem is that I have with a large number of companies that I try to follow is to keep track of the timing of the drilling. And time is money, so most often I buy something and sit with it for 2 or 3 years and it doesn't go anywhere and usually declines. And,
Been there, done that.
I mean, the majority of them, but when you get something like a Novo or a Great Bear, so I guess in this kind of market, my preference would be for the drill plays. But overall, at the same time, I mean, Coral Gold, which is here, selling at less than cash, with with Barrick spending a lot of money to explore the Robertson property along strike with the pipeline and the Cortez projects. I think that's a very exciting story, and feasibility, or I guess a pre-feasibility study coming out in Q1 with 50 million shares of stock, tightly held, nobody paying attention to it. I think that kind of a play, which isn't based on their drilling, but Barrick is doing work there, and I think that's a different kind of a play that I think is very exciting as well. Although, if you look at it now, it's like watching paint dry, but it could take off like a rocket, I think, when Barrick comes out with its PFS.
John?
I don't have any great optimism for higher real metal prices in any of the metals to, create bubble dynamics in this market. So I'm focused largely on discovery exploration. I love the S-curve that kicks in. I mean, we're seeing this now with Royal Nickel and its Beta Hunt project, where they've found a completely new aspect to a tired old system. And Jay's point, I mean, you don't know which one of these is going to go next, and you can't really own all of them because most of them will probably have nothing happening. It is a market now where you really have to watch and scan and just watch for any sort of movement or news, and put in some work to understand if the news means anything, and be ready to follow the play when it happens, because we are in no way in a rising tide market, and I'm not sure what it will take to create a rising tide market. This is really discovery result driven. You can look at something like Nevada Exploration Inc., a great presentation by Dennis Higgs today. It may be better to not own it at 25 cents and wait till 50 cents to $1 when it starts to move, and pile in then, because this is a type of story that could go to $10, $20, but if they don't hit anything, it'll stay exactly where it is. I personally try to own them in advance and just be patient. Being in the US, you have a 1 year capital gains difference, significant difference, so I don't really care holding something for a year. In Canada is a different psychology. But yeah, discovery exploration is where you're going to make the money in this market.
Okay, I'm going to ask each one of you if you've got an example of each one. It'd be nice if one of the examples was here, but they don't have to be. If it's somebody you follow that you think people should be looking at in terms of a discovery story, the company here would be nice, but it doesn't have to be a company that's here.
Yeah. I'll take that next, I guess. In my insider alert, I have a company called Golden Ridge, very tight share structure, 20 million out. They were trading at 12, 15 cents. Made a big copper gold porphyry discovery up in the Golden Triangle this summer. Stock ran to 45, 48 cents. Drilling stopped just recently, so it's going to get quiet. Stock went right back to 20 cents. But it's a discovery of merit, and I've invited them to the show here in September, and they had a conflicting problem with another show in Toronto, so they will be here in November at MIF. So Golden Ridge Resources, GLDN, on the TSX Venture for 4 letters. That's an interesting one. You wanted an example of discovery and cash value kind of play?
Either or.
Okay. In my 3 strategies to profit in the next 3 months in junior mining shares, I listed Ethos Gold, who I've also invited to the show for November. And the reason I didn't invite them before is because they weren't ready to move forward. If you're not going to make news, I don't think you'd want to come to a show like this. When you're ready to make news and get things going, then that's when I invite my companies. So Ethos is a company that I've known about for a long time. They've had a lot of cash sitting around, but they hadn't employed it yet. 6 million in cash, 47 million shares outstanding, current stock price of 12 cents. That's trading like, really close to cash. And they have a brand new Mexican gold project that I like, that I just, learned about. And I was recently on a site visit down there. So that one's gearing up. And so there's an example of a cash, you're buying the stock at cash value, tight, good share structure, and going to start making news. So,
Jay?
One discovery story that I like a lot that I think has a great deal of potential is Triumph Gold Corp. They have the project that was previously owned by Northern Freegold Resources. It's in the Yukon. They've had some really pretty phenomenal intersections of copper and gold in a porphyry system. And it's a fairly deep system, but apparently gaining a lot of attention from not just gold mining companies. Goldcorp is the largest holder of Triumph with 19.999% of the company. They have really been there for the last couple of financings, but it's not just the gold companies that are interested in this project. I'm told some of the largest porphyry, or the largest base metal companies in the world have shown a great deal of interest. So that's one of my favorites right now in discovery mode. I think it's got a great deal of potential. I think the probabilities are pretty good for pulling that together. The previous management had assembled a fairly large polymetallic deposit. I can't remember the numbers exactly, but in all categories, maybe something approaching 4 million ounces of gold equivalent. But this is a new team with fresh eyes on the project, new concepts, geological concepts, and they seem to be working very well. So that would be my pick for discovery right now.
John?
Well, I've already mentioned Nevada Exploration Inc., in which I own a lot of shares, enough that if they actually deliver and find something that looks like a Cortez Hills, not only does it go to the moon on that, but they have the key to replicating that in a dozen other places in Nevada where they have these groundwater sniffs that are basically open ground. And this stock has so much upside that I can quit being a newsletter writer, which is why I'm assuming that they're not going to hit anything.
Darcy.
I am so terrified of this drill program that where I would put my money now is where I have put it for the last 4 years, which is Scandium Mining International. And while the sector doesn't lend itself well to bubble dynamics because you can quantify the upside limit, this company is different in that they are creating a market that could grow to a $2 billion market for this obscure element, scandium, which everybody knows what you can do with it to make aluminum better. And lightweighting is something that's becoming more and more important, especially in the transportation sector, but they've never been able to do anything with it because it's never been available on any primary scalable supply basis. And these discoveries in Australia, and there's about 4 or 5 of them total, this company's in the lead. It's got a smart strategy for solving the chicken and egg problem. So if they start announcing offtake agreements, then that 100 million capex that they need will come in at hopefully a much higher price. And you can put sort of an 80 cents, $1.60 target on it by just their existing plan. But if you look at the expansion capability and their first mover advantage of being able to aggregate all the others and build a scandium supply powerhouse, those are bubble type criteria where you have a winner take all type of situation as you have in the cannabis sector, and a market that can grow fabulously bigger than it is right now. And when the street figures this out and gets into it, you can't put a top to a stock like that. And I'm quite excited about the stock right now because it's gone from sort of 18 cents to 28 cents in the past week, and I had absolutely nothing whatsoever to do with it. So I think finally something is starting to happen with this company.
Okay. I'll give you a couple of both ends myself. I mean, I'm going to talk about guys that were invited here since it's my conference. And I'm going to sort of 3 stages. One sort of pre-discovery, assuming they have one. One's post-discovery, and the other one's advanced development. Pre-discovery, it's a company I invited here, and I intentionally invited them because it was a stock I knew nobody else followed. Because I do try to invite companies so that there's going to be 1 or 2 new ones that most of you have never heard of before. And I've had like 20 people come up to me in the last 2 days and go, I never heard of that thing before. And that's Pan Global. Pan Global is, all of their projects are in southern Spain and in Andalusia. What interested me about it was it got mentioned to me by a mining analyst several months ago that owns a bunch of it. He doesn't follow it formally because they don't have a discovery yet, but he's a guy I know who's a very smart guy, very smart geo. I looked at it and I had the same issue probably that I suspect everybody did at first, which is you look at the targets and you go, whenever you see a set of really strong targets that nobody's drilled before, that's your first skeptical question is, well, how come nobody drilled these before? I mean, these are such obvious targets. It took several conversations with Tim Moody, the guy that runs it, to realize, one, they were actually his targets, literally. He found them when he was running exploration for RTZ there. But also, just given the surroundings, the fact that it's private grazing land, it's not a hard place to work in terms of getting permitting, but it's not like a random place where some guy could just get out of his truck and go wandering around. It is private land. And plus, most of the anomalies that are there, they've generated in the last year and a half when he went back after 20 years. So I really like that one. Those guys are drilling right now. It's, there is direct evidence on surface, but it's not like there's trenches with 50 meters of great grades in them. It is a drill spec, so it's going to work or it's not. But they do have enough cash that all of the things he's targeting across 3 properties, he's got the money to drill them, so that's fine. Post-discovery, the obvious one, I guess, that everyone's talking about, Great Bear. I got a bit of it before the drill discovery. It's had a big move after, a really strong set of holes, but anybody that knows me, this would be a meaningful statement that I went back and probably spent more money buying it after the discovery than I did before, which is not generally my MO. I like to be in early. But it's one of those projects where it was sort of missing a few pieces. I mean, Red Lake is a place that gets so much attention, not just from Bay Street, but also from majors, that if these guys can pull together a few million ounces, it'll go, and it won't go cheap, because Red Lake's just one of those places that companies pay up for. And increasingly, as information has come in over the last month or two, it looks more and more like they do actually have all of the classic pieces of the geological model that drives Red Lake, which wasn't clear before. I mean, if you guys watched Chris's talk yesterday, he mentioned the fact they were able to get the project really cheap because it seemed to be the wrong rocks. It now seems to be the right rocks, and that makes all the difference in Red Lake. I don't doubt for a second they've got several majors, not just Goldcorp, several majors breathing down their neck right now, because there's a lot of guys that want into that camp, because it's simply a camp it's a high margin camp that's made a lot of money for a lot of companies over the years. So if he can pull a couple of resources together, that thing will go. At the opposite end, I mean, company you've heard about from me before, and then I invited here, Vendetta. Vendetta will hopefully finally next month have, probably late October, have a PEA. And really the PEA, I think, is where the dance begins. There are 2 companies, the 2 closest mining companies to them, both have very strong arguments for taking their project out. They will, because they have to treat it as if they're building, a standalone deal, that the PEA will be done on a standalone basis. I don't think the cap is going to be that high, just because the logistics happen to be really good there, and it's not a huge mine. It would be like a 1 million ton a year open pit, so it's not massive or anything. So the capex won't be that bad, but I'd be quite surprised, even on a standalone basis, if the NPV comes in under 200 and the IRR is under 30. I'd be surprised. And those guys are using realistic base metal prices. They always have. It's one of the things I like about them. They're not like, oh yeah, we're doing this at $1.40 zinc. Like, they're doing it at like 90-cent lead and probably $1.05 zinc. I mean, they're pretty realistic. But both of the companies that are closest to them, one of them is about 1.5 million tons short of what they need to keep their mill filled, and I don't think they've got an easy route to get back to that. So 32 is not really admitting that, but everybody that's looked at their mine can see, like, they're not going to get it up to 4 million tons a year. It's not going to be easy. The property on the other side of it that Chinova owns, they ran out of ore about 6 months ago. I don't think they know what they're going to do with it. It's basically care and maintenance. But their mill with a bit of rework, and it's only like 20 kilometers away, would be perfect for Pegmont. So I suspect one of those 2 companies takes it out, but everybody's acting like they're the only game in town. So it's going to be a bit of a dance once they've got this PEA done. I know there's a lot of guys under CA, so I'm not expecting it to happen like next week, but I would be pretty surprised if the company's still around in 6 months. And it's trading at 18 cents, and I don't think the takeout's going to be at 18 cents. I'd like to think it's going to be at least 2 or 3 times higher than that, which would still actually be quite cheap for the buyer. I might have to send you in, Tukey, so don't go anywhere. Now, are there any, I mean, obviously everybody here seems to be preferring sort of discovery places, because none of us, nobody's, I guess, feeling terribly optimistic about metal prices. I mean, is there any metal that you got comfort with, say, a year out, 2 years, 3 years out? I mean, are you feeling kind of optimistic about any of them?
Yeah, I mean, I'm a precious metals guy mostly, but from a commodity standpoint, I still like zinc. And even though copper's fallen off, copper's the basic building block of society. And if you believe in the economic boom continuing, that copper has to come somewhere, especially with all this electric vehicle market that seems to be growing in such an amazing way. So, yeah, precious metals, zinc, copper.
Okay. Are you feeling optimistic about anything, Jay?
You know me.
Yeah, I know. I know. Don't go suicidal on me.
First of all, I don't know how much of a boom we actually have globally. I think living in America, Mr. Trump is not likely to understate his achievements. And I think if you look at the
Very diplomatic.
he got pretty much a similar response at the United Nations the other day when he talked about having the greatest economy that in the history of the United States or something like that. So I don't think it's as good as the propaganda in America wants us to believe it is, and it's not necessarily just because of Trump, it's because of the way there's a vested interest in making things look better than they are. For example, the New York Fed has a favored inflation index that's 1% higher than the CPI, and they've decided that they're not going to publish it any longer. And my suspicion is they're worried that inflation may be starting to heat up, and it might start people thinking in terms of, or it might heat up the velocity of money. If people start thinking tomorrow things are going to be more expensive, they'll stop sitting on their cash and maybe sell some stocks and buying commodities and things like that. I don't know, but I don't think I can't share the idea that base metals are going to be really rip-roaring strong because of booming economy, maybe because of shortages in the case of zinc and all that. But actually, if we go into another credit debacle, which I believe it's not a matter of if, but when, I want to own gold because gold does extremely well, more than silver, as a monetary asset. And we saw that after 2008, 2009, because you can bet your bottom dollar. The only response the monetary authorities know is to print trillions, and I don't know what the number is higher than trillions it will take the next time.
Quadrillion, yeah.
Quadrillion to get things, keep things from total collapse. So then you want to own the precious metals and especially gold.
Anything you're positive on, John?
Well, I look at the warehouse stocks in both LME and Shanghai for zinc, and it is low relative to where it has been amongst all the base metals. And China is a major producer, and somebody informed Trump the other day that banning imports of zinc and rare earths from China is not a smart idea if you want to reshore manufacturing to America. And so they decide, okay, we're going to keep importing these metals. But if his antagonism towards China continues to escalate and we end up in some sort of possibly even a military standoff over the South China Sea, we're going to see some of these metals that come from China as the largest producer have a severe shortage overseas. And metals that would be impacted are zinc, and tungsten is a very important one since it is a war metal that comes 85% from China. And of course, almost everything that's made from rare earths is now made in China. So rare earths could come out of the deep trough that they are in a case like that. But zinc itself, it's a function of the macroeconomic economy. I think the markets may be wrong in the way they're treating the resource sector, assuming that they seem to be assuming that everything Trump's doing is going to result in some sort of a serious global economic slowdown next year. And so they've almost sold off preemptively in that while everything else has continued to ramp up. And if it turns out that that's not the case, it is the most undervalued sector, and some of the metals are going to rebound. And as for gold, I had somebody tell me, oh, watch it, and we're going to see gold drop to $950 in the next couple of months or so. But that price, it's way below the inflation-adjusted price of $400 gold in 1980, and I think everybody will be buying gold at that level. I think gold has to go up because there's a historical change happening in the power relations in the world, and you really want to own some physical gold and forget all this crypto stuff, because when they pull the plugs on those computers that keep solving those transaction equations or problems, that's all going to vanish. So I don't know when gold is going to start going up in real prices. All the policies in the United States, Trump is on track to beating Obama's record of creating the biggest deficit increase by any prior administration. A record that, by the way, Republican administrations always held until Obama came along. So the inflation, it's going to come back. Labor may even start to get some power to increase, demand higher wages, and then you get that 70s wage cost push spiral, and then of course that will put a lid on the U.S. dollar, and gold could come back into its own. But if everything, as people fear, is going to go down into another meltdown, as Jay suggested, then we're all screwed.
Nice ending note there, John. Yeah, my views aren't dissimilar. I'm probably a little more positive on. I'm a little more positive on copper than zinc, although the timing is different, I guess. Zinc, there are a couple things coming on stream. I'm not concerned about it, but there is production coming on stream. But John's right. I mean, the current, they're not quite as low as they were at the start of 2018 when everybody was going nuts about zinc, but the inventories have actually gotten down fairly close to that again, with nobody even really noticing. And there's no obvious short-term. I mean, most of the mines coming on stream, they're not coming fast enough to really change the narrative. So I think the odds of another move back up in the zinc price to, whatever, 130, 140, 150 is not. It's not that unlikely, actually. I think it's probably going to happen. I don't think the zinc bull is over. Going 2 or 3 years out, the story is probably actually a little stronger for copper, but it is 2 or 3 years out. I don't expect copper to do anything bad on the downside. But if you look 2 or 3 years out, and this presupposes, as both John and Jay noted, that we don't go to hell in a handbasket, I think looking at 2 or 3 years out, you kind of almost have to assume there's going to be at least a mild recession. That's just law of averages, given how long this expansion's been. You don't have to be doom and gloomer to think that's going to happen. It's just, it might not, but it seems like common sense to assume that. But if you assume even kind of decent growth, it's simply the size of the copper. The copper market is a very big market. There's a reason why most of the world's largest mining companies focus to a large extent on the copper market. It's because it's one of the few markets that's big enough for them to play, where the amount of additional metal you need every year just to satisfy normal demand growth, which is not high, it's 2 or 3%. It's nothing like gigantic. But you look at 2 or 3% of the copper market, and you need like a new Chiquicamata every 7 or 8 months, which is like the world's biggest copper mine. It's not easy to find that much copper and put it in production. So it's not a matter of, it's not that I'm expecting any specific supply problem, it's really freaking hard to find and develop and put into production 500,000 tons of copper every year. It's really hard to do. And I don't think it's going to happen with regularity year in and year out unless we give copper miners $4 or $5 copper. Without that, you ain't going to see that many new mines come on stream. It's just not worth it. Not going to happen. So that's not that's a plain supply-demand thing. So that's not an overnight thing, but I think it's almost inevitable that copper is going to be $4 or $5 because that's just what you're going to need to bring that much production on stream. Gold, who the hell knows? I mean, I'm not a gold bug. I'd like to be, given what my portfolio looks like, but do I think it's going to go higher? Probably. I mean, I'm cynical about the U.S. dollar holding its current value, in part because I don't think the President of the United States wants it to. I mean, Donald Trump is many things, but he's not that opaque. I mean, he's pretty transparent, and he's a real estate guy, right? I mean, His dad was a real estate guy. He's a real estate guy. If you're a real estate guy, you don't want high interest rates. I've never met a real estate developer that goes, man, I wish they put interest rates up. Like, that just doesn't happen. He's not supposed to be able to tell the Fed what to do, and he doesn't in a literal sense, but he's sure as hell not going to be shy about getting on a podium and telling them not to raise rates. And I think John's right. If we see any kind of a move in inflation, it's not going to be easy for the Fed to stay ahead of the curve. I mean, there's too much debt out there. The U.S. is running monster deficits, and they're going to get way bigger with the spending curve that they put themselves on now in Washington. It's going to be very difficult for the Fed to get ahead of any kind of a real inflation ramp and not blow things up. So, I mean, I personally hope that we do see some cost-push inflation, because I think it's insane that the U.S. has had an expansion for 9 years, and basically 80 or 90% of the U.S. population has gotten sweet fuck all out of it. I mean, it's all gone to 10%. I mean, that's not going to end well. Like, so I'm kind of hoping the average person actually starts getting the raises they haven't got up to now. I mean, that'll help us in the gold market, but I also just think it's the right thing to have happen.
Yeah, absolutely.
Are there any other, like, there's a couple of other metals that, they have their moments, and it seems recently a lot of people are talking about uranium again. Do you guys have thoughts about uranium in terms of good, bad?
Yeah, I mentioned that, it's just at the Beaver Creek Precious Metals Summit that happens every year in Colorado in September, and I love that conference. I use it as a bellwether for what's going on, and people forget that these fund managers are the biggest buyers of our shares, and when they come into the market, they come big, right? Well, we haven't seen that in quite a long time. In that 2003 to 2006 run, it was, I mean, all the boats were floating, the turkeys were flying, these guys were reckless, throwing money around at anything that did a financing, right? Well, they've learned their lessons, they're more selective, but I have to tell you, there was record attendance this year at the Beaver Creek Precious Metals Summit. Over 1,100 fund managers. Some of the people walking around that room manage hundreds of billions of dollars. There's one fund there was managing over $1 trillion, mostly Saudi oil money. But you get to know these fund managers after a while, and you're talking to them, and this conference is set up with all these booths, and they have half-hour meetings with the mining companies that they want to meet with, and every half hour they switch, boom, boom, everybody's moving around. It's not a retail conference, it's not for retail investors, but it always gives me a good insight into what these guys are thinking and where, is it coming? Is that moment coming? And I can tell you that they are definitely increasing their interest. They sense that this is going to change. You can almost feel it. I was talking with several of you yesterday, and you're giving the same kind of feelings, that you can feel something's about to change. What it all means, we don't know yet. We'll find out. Nobody has a crystal ball. But in the direct question, I am a uranium bull, but I would say couched about it. I really think we're still a couple years away. I see the real supply-demand crunch happening in 2020. And I know a lot of people disagree with that. They think it's going to happen earlier. But I use a index. I wrote the U3O report back when uranium wasn't going, and then all of a sudden we made a lot of money, and then all of a sudden it shut down as quickly as it started, and stopped writing it until just last year I got on board finally. And I use an index. It's called the SLU308 index. If you look at that chart, that really tells me, that chart seems to be the best indicator for me what's going to happen in the uranium market. It's a very
Is that like a forward curve?
It's an index, yeah.
Okay.
Yeah, and you Google search it, you'll see what I'm talking about. But I am a uranium bull, and like I said, I hadn't written the U308 report for a very long time and started it again last year. So I don't think there's a lot of uranium companies you have to pay attention to. There's just a very few select really good companies that I think are going to do tremendously well when that market goes. And unfortunately, you have to be in it before the move happens, because it happens so quick. And if you're a week or two late, you're going to miss some of the biggest gains, and then you're kind of being cannon fodder. You're buying the higher price shares with a lot of downside risk in case the rug gets pulled out from under us. But I think it could last a while.
Okay. What about you, Jay? You got any?
Uranium, I guess they're building a reactor. They're building a reactor in Japan again now, I think.
Yeah, well,
So-
they've restarted another one. a couple of weeks ago.
Yeah.
I think.
Yeah. I haven't kept up with the supply demand. That is just why for uranium for a number of years. Why bother? I know that Michael Oliver, who the technical analyst that I'm always raving about, because I really do think he does good work. His work is suggesting that we're probably starting a bull market in uranium right now. So, yeah, I mean, I think I've had uranium energy on my list. It's been worse than dead money for God knows how long. And so I hope so. I mean, maybe I hope so, so I believe so. I hope that's not the way I'm acting, but I don't know. More than that.
What about you, John? Yeah.
Well, it's hard to be optimistic in the near term. We've got 7 years now of uranium piling up in the Japanese nuclear facilities since 2011. And when they restart all the facilities, they'll be working that down for some time. We're working down the nuclear or uranium stockpiles from Germany, which is not getting back into the nuclear energy. Kazakhstan's trying to curtail its supply because it's basically the reason we have such a lousy oversupply situation and weak prices. Cameco has shut down MacArthur so that they're trying to remove supply. That can be put back online if they so wish. So even when the things turn around, the Japanese reactors are all going. It's going to be a long time before a significant imbalance. Now, maybe when all those Chinese reactors start coming on stream in the 2020s, that's when a problem may materialize. We also have now something called a Yellow Cake Fund or something like that out of London, which is trying to do what helped the uranium to $140 during the past bubble, clean up everything in the spot market and manipulate it up. That's being attempted again, kind of like Cobalt 27 is trying to do with cobalt. But I don't think that's going to work again. The long-term contracts are still very low, and that's where the uranium gets sold by producers, not in the spot market. So even though you've seen that little upwards tick to $27 a pound for uranium, I don't think that's a meaningful signal given all these other supply factors.
Yeah, I agree, John, because the reason I'm saying 2 more years is that any rise in the spot price is going to be hit. The Kazakhstan supply is going to hit that. They're going to sell, and it'll keep it in check, I think, and won't let it go to the levels that would cause a uranium bull market.
Yeah, I'm of the same opinion. I mean, I had a few people come up and ask about uranium companies yesterday. There's really only one on my list that's been on the list for a while, and Energy Fuels, which has it's actually had a pretty good year, partially because the uranium price has gone up some, but partially because management's just being fairly smart about a few things. Like they've just basically done a good job at capitalizing on a better market, and they're producing a bit of vanadium, which is kind of a hot thing lately. But I do have a very hard time envisioning, because a lot of real hardcore uranium bulls I talk to, they all seem to be waiting for the next 2006, and I think the odds of you seeing a buying panic that takes the uranium price to 100, 120, 140 is like zero.
We're not there.
Like those guys aren't doing that twice. I mean, it was a really dumb move the last time, and I don't think they're going to repeat it. And like as John mentioned, there are a bunch of above ground stocks, and for good or ill now, because they weren't really a big factor 12 or 13 years ago. You've got the Kazakhs, who are sort of the swing producer, and those guys can push a lot of uranium out of the ground at a pretty low cash cost. And yeah, they're not idiots. They're trying not to strip the market. They've cut their production back, but I can't read their minds, so I don't know at what price level those guys push the button. And as both John and Greg mentioned, I mean, long-term contracts, that's what really makes a producer profitable, or a potential producer. I mean, what kept Cameco alive through a lot of lean years, like a lot of lean years before the last run in uranium, was that producers, the energy producers, the utilities realized that, if I own 20 uranium reactors, if I've got to pay Cameco $30 a pound to make sure my reactors have fuel, then I guess that's what I'm going to do, because it's not a significant cost. But there's a big difference between that and saying, oh no, a bunch of hedge fund guys jumped on the uranium market this year and drove it up to $100, so I'm going to freak out and sign a contract that makes me pay $100 for the next 20 years.
Yeah.
Ain't going to happen.
Well, they did last time.
It did last time. That's why it ain't going to happen this time, because all the guys that signed the last ones don't have a job anymore. They all got fired. I don't see that happening twice. Do you want to take a few questions before I do the raffle? I mean, anybody in the audience got something they want to ask? Anybody here?
What's your take on potash? Nutrien had a bit of a run this year.
Yeah, I haven't looked that close at the potash market. I mean, the potash was another one of those things that had a huge run. I mean, it's one of those nice, stable commodities. I mean, there's not a lot of producers out there. Most of them are very big, so it's a bit of a boys' club. I don't know. I don't feel like I've got good enough contacts in any of the big producers, because it's always felt like one of those commodities where you got to have an in with one of 3 or 4 companies that'll tell you what the potash price is going to be in 5 years. Because in some ways it's a pretty controlled market, right? There's really only 3 or 4 companies that dominate that entire market, and they pushed the price a little bit too hard last time in the aughts, and they ran into a lot of trouble, particularly with the big buying countries, specifically India, where a lot of the individual farmers can't really afford to buy the price when it's high price, and the government was really sort of a monopsony, was buying for the farmers, and there was some real headbutting between them and the potash companies. I think the potash guys are smart enough; they're not going to try to push things too hard next time, but it's not an easy thing it's one of those things. It's sort of like iron ore. Like iron ore's had a good run too, but it's a hard place for a junior to be, because there's really no such thing as a low capex. There really isn't any such thing as a low capex iron ore or potash project. It's the type of thing where you just need to be doing like 5 billion capex. So it's tough for a junior to. There's no real room for one of those guys. Actually, I'm going to ask John. Since we're on the whole potash thing. What are your thoughts about your favorite deal in Brazil down there?
Yeah, I was going to mention.
Because that's really a marketing story, right? Can they market the product?
So potash, I think, in the past year has been stuck between $200 and $220 a ton, and it's not going to go any lower than that. And for now, there's really no reason for it to go higher. And the big guys control all of that, so it's not really a great space for juniors. There may be some potash that comes into the market as byproduct from some of these lithium brine operations that come into operation down the road. But if you like the idea of potash, the innovation story is Verde Agritech, and they were here in my session in May, and they have a silicate form of potash, only 10-11% of K2O in it, and they had spent tons of money trying to convert it in conventional potassium chloride, but when it dropped below $300 a ton, that was hopeless. But they discovered a few years ago that they don't need to treat the stuff; they just need to grind it up finely and spread it on the Brazilian soils, and the microorganisms that are in the soils go to work on this and literally break down the mineralogy and release the potassium and other elements that plants need. So they've started this campaign of just quarrying this at a very small scale, getting farmers to try it, and they have billions of tons of this stuff. And if there is ever something that causes potash to go up, like say a problem in Belarus where that supply evaporates, the Brazilians, they import 95% of their potash. They are in deep trouble. So this thing itself is almost like a strategic national asset, and it's cheap, 65 cents, only about, I think, 45 million shares, and they're trying to do this through internal cash flow. So it's similar to the scandium market, where they have an infinite amount of supply, but they have to build a market for this. They have to convince the farmers that this is indeed an effective alternative to conventional potassium chloride, which gets really washed out of the soil fast in Brazil with all its rain. And what they're doing is they're doing comparative pricing. They're linking their price to what the price of potash is. So if potash gets cranked up to $300 a ton, their price will also go up. And so it's a way of having leveraged exposure to potash, for which there aren't any options or futures that you can trade. So that's my pick. That's the kind of stock that too could end up being a $5, $10 stock if you're patient for another 3 to 5 years.
Okay.
Could get us out of being newsletter writers? Could it get us out of being newsletter writers?
If you own enough.
Do you, John?
Anybody else have any ideas that we can retire on?
Comments on the complex graphite market and public graphite companies?
I'm not a graphite guy personally.
My foray into the graphite market didn't work out too well.
I don't follow.
I mean, most of the graphite comes from China. So there again is a potential problem, at least of the large flake graphite. And so it's a complex space because each graphite deposit has its own impurities in that, and you have to find a buyer for your particular mix of impurities. So it's hard to say, well, what is the proper price for the graphite that you are going to deliver? It's a tough business.
Very
It's like an
complex.
industrial mineral, and,
It is an industrial mineral.
I don't want to expend the bandwidth trying to understand a junior in the graphite space.
How about vanadium?
Funny you should ask, Tukey. I'm not following.
Motive behind that.
Oh, I know there's a motive behind it. I'm well aware. I'm trying to get my head around the vanadium market because I still don't understand the supply, and it's not insignificant that comes out of the slag reworking. Like I'm still trying to get my head around where the price points are, where that stuff can come back in the market, because that seems to be like a big swing production area. I mean, it's a small market thing. Vanadium does have the advantage that it's not decent grade vanadium deposits aren't that common. And it is, it's not a tiny market. It's a relatively big steel additive. I mean, really what kept me largely out of both graphite and lithium, to be honest, was I don't have anything against either of them. I don't have any doubts about the utility of either of them. It was not wanting to get caught on the wrong side of the market cycle. I mean, I got out of iron ore by the skin of my teeth, and I didn't want to have the same thing happen to me with lithium and graphite. Not because there's anything wrong with either lithium or graphite, it's that there's a shitload of lithium and graphite around. I mean, lithium is not rare. There's tons of lithium around. Graphite is not rare. There's tons of the stuff around. There's graphite occurrences everywhere. The trick is, markets like that, you kind of need to be the first to market. I mean, our friend Joe Mazumdar, there's a reason why the lithium company he follows is one that's essentially in production, because his concern was, I don't want to be following the fifth guy in production because he's screwed. The first guy, the second guy, the third guy, they're probably going to make a ton of money. Anybody that's too far back in the lineup, they're done. And I think that's something you always have to watch for with either specialty stuff or stuff that isn't actually that rare. And it's not a matter of, it's not that lithium was rare before, it's just you have to have a certain price point before the stuff starts coming into the market. And at a certain point, there's a lot of it around. Graphite's the same way. Vanadium at some price points probably the same way, but I don't think it's as common. I mean, I only know of 2 or 3 decent vanadium deposits because it mainly seems to come out of slag. And if your guys want to explain that side of the market to me, they can feel free to call me, Tukey, because I know so much of it is almost like a secondary supply source, and I'm not clear on what the price point is where you could expect to see a whole bunch of that stuff come in from in there and mess the market up. That's my only real concern with vanadium. I like the fact that it's relatively rare, unlike some of the other specialty things that aren't actually that rare.
I think vanadium has potential to be a bubble metal. It comes primarily from China, then Russia, then South Africa, and then other places like Brazil at a much lower level, and it has historically been used as a steel additive. But It's very similar to cobalt in the sense that it's coming from places that are geopolitically troublesome. Congo is just a basket case country, but in the case of China, this is now America's enemy number one. And for cobalt, it's obviously the emergence of the electric vehicle and the lithium-ion battery that requires cobalt, which is driving the price of cobalt. And China itself wants to be fully electric by 2025, and not necessarily because they care about carbon dioxide loading of the atmosphere, but because they care about reliance of oil that has to go through the Malacca Strait, and which the United States could completely cut the country off of, and which it probably will cut off a big source of when it goes to war against Iran and shuts down that major supply of oil for China. So they just want to get
Mr.
away
Happy.
from oil dependency. But in the case of vanadium, it's long-term storage batteries that are creating new demand for vanadium, and that's why it's going up. There's plenty of vanadium available for the macroeconomic demand growth, and you would expect that. Well, Trump says, well, we don't want any solar or wind-based energy that requires long-term storage, and we're going to do our best to shut that all down, and so we don't need any long-term battery vanadium-based battery storage. But we know this is just a temporary thing, and the trend is towards growing solar and wind-derived energy and storing it when it's blowing or shining well, and using it when it's not. So I think there is room. I mean, ferrovanadium's gone from sort of $6-7 a pound to as high as $50. It hit 60 in 2004, 2005 when China was waking up and all these pipelines were being built all over the place. So it could stay up there for a while. There aren't a lot of vanadium projects in the pipeline, and like this one, which was called Cornerstone until a few days ago, First Vanadium Corp. I mean, they picked up a vanadium deposit in Nevada that Scandia Mining at one point owned, and they have the resource. They know what the grade is. The issue with vanadium deposits is it's the same as with rare earth deposits. They are chemically complex to process and often have significant tailings disposal problems. So it does, if you are going to bet on a company, look to make sure they have the technical people on board who can develop the flow sheet to properly do this. In the case of First Vanadium, they said, well, we're going to publish a PEA at the end of 2019, which means they don't have to produce any negative news for the next year. So it's turned into been adopted by newsletter crowd, and that, hey, this is our vanadium proxy, and we can crank this to any price we want, because just like with rare earths, when they finally started doing pre-feasibility studies where you had to have some serious metallurgical support for your flow sheet, those things ramped up to the moon, and then it all caved and fell apart. But of course, so did rare earth prices, but the juniors fell apart well before the rare earth prices did, because the market started to realize none of their flow sheets work.
Okay, on that happy note, now I'm going to give you people things.